Hello, good morning to all and happy Friday. Today will be the 5th of January 2024 and welcome to today's Daily Dose of Market Insights by OANDA. I'm Kelvin Wong, the Senior Market Analyst of OANDA Asia Pacific. All right, so before we start our Daily Dose of Market Insights, let's take a look at the disclaimer slides first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product. And as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so as usual, we will kickstart with what happened yesterday during the European and the US session in terms of cross asset classes performance and as well as key economic data releases. So let us start with cross asset classes performance first. So yesterday we do see a bit of a mixed bag on the US dollar, while the dollar yen continue to strengthen. So let me open up my chart so that you guys can see what I mean over here. Give you time to load. So what I'm sharing you right now is actually the very short-term 5-day rolling performance of the major dollar pair. Okay, 1 second. Yep, here we go. Yes, so this is the 5-day rolling performance of the dollar pair. That means what we could see over here is that it's the dollar versus the rest of the currency, like dollar as the base currency. So we could see over here, right, since the start of this year, 5-day rolling performance may take into account of the last week until yesterday, the dollar has been more or less been sideways against the other currency, like the Aussie, the Kiwi, sterling, but has been particularly been weak with against the sterling, where we actually have a bullish bias on the sterling dollar yesterday, which actually the sterling dollar with the sterling versus the dollar rebounded nicely off the short-term pivotal support level. But what's interesting over here is that the yen continue to weaken against the dollar. So the dollar is actually the strongest performer now against the dollar yen. So what we could see over here is that it's a bit of a mixed bag story. We do not see a very clear signs of a dollar strength resurgent back into play into the market, despite the fact that yesterday there's actually this kind of a prelude to today's non-farm payroll data, which is the privately compiled ADP numbers. So ADP numbers is actually a private sector monthly US job data released by the private sector, not the US government. So the US government one is being released today to call the non-farm payrolls. So yesterday, private compiled sector data on the US job market indicates strength on the US job market. So if you look at the numbers which is being reflected over here on my screen, yeah, this is the ADP unemployment change data. So the data came in better than expected. Market is expecting 150K job added, but the privately compiled data came in at 164K added number of jobs. So given the fact that such a lousy number of job data that's being seen over here, let me show the trend. Okay, you see a gentle tick up since September last year. All right, so this yesterday's data release for the month of December is the strongest number of job added to the US economy compiled by the private sector ADP. By right should indicate dollar strength coming into play. Why? Because with a very strong job data added, there is less necessity for the Fed to actually cut rates as much as 6 rate cuts as predicted or as penciled in by the Fed Fund futures market for this year. All right. So, but however, this is not being reflected on the FX market yet because there's actually other factors at play as well. So, given that price action is predominantly the main factor for short-term trading, so given that the fact that the price action has not started to see a much more pronounced dollar strength coming into play, we cannot say that despite the fact that the dollar yen is actually strengthening across the board, it starts to have a spillover effect to the rest of the broader FX market. So that's for the FX space. So i.e. we still do not see a clear signs of a potential medium-term bullish reversal for dollar strength coming back to the FX market. Whereas for the US stock market, the Nasdaq 100 continued to be rather weak over here because if you look at the Nasdaq 100, it's being pulled down by the Magnificent 7 stocks we could see yesterday, where Apple and Amazon actually underperformed the broader base S&P 5, at least the S&P 5 heat map, but the Magnificent 7 has a very high weightage in the S&P and as well as the Nasdaq 100. So Apple down negative 1.27%, Amazon down negative 2.63%. That is dragging down the Nasdaq 100. So you look at the Nasdaq 100 over here. Okay, so the Nasdaq 100 actually going to underperform yesterday, negative 0.53%. Compared to the Dow Jones Industrial Average, which closed almost unchanged at a positive 0.03%. So we start to see since the start of this year, a very, we call it a stark underperformance on the Magnificent 7 mega cap stocks, which is heavily weighted inside the Nasdaq 100. So their total weight comprises of 35%. So if you look at the Nasdaq 100 since the start of this year, okay, by looking at our chart, this is the OANDA's Nasdaq 100 chart. So since the start of this year, they have already been declining at 4%, okay, negative 4% so far, year-to-date loss, okay. So overall, potentially we could continue to see this kind of what I call lackluster movement heading into Nasdaq 100, heading into next week, where we get better clarity as better liquidity starts to come back into the US stock market. And also for next week, towards the end of next week, we will kickstart the US earnings seasons reporting for Q4, starting with the major banks like Citibank, Bank of America, JP Morgan. They will all report their Q4 earnings number, Q4 2023 earnings number on next Friday. Okay. Then for gold continue to remains resilient. So gold managed to hold above 2030 level, and as well as WTI crude oil is going to be backing up the what you call it, the earlier weakness that was inflicted on the oil market at the start of this week. WTI crude oil price managed to actually trade above the US dollar $70 per barrel. So that's the quick recap of what happened yesterday, and as well as the key economic data release, which is the US ADP job number data. So what's on for the benchmark stock indices short-term technical outlook? So let's start with the benchmark stock indices first, the major benchmark stock indices. Okay, let me share my screen. So this will be the short-term technical outlook. So let us start with the with the Nasdaq 100 first. All right. So let me now expand my screen. All right. So Nasdaq 100. So Nasdaq 100 yesterday we do have a neutrality bias sideways, but it broke below the neutrality range of 16,390. So with that, price action going to trade within this minor downtrend scenario. That means what we are doing right now is a minor corrective decline within its medium-term uptrend phase. Why? Because price action is still trading above the upward sloping 50-day moving average. Okay, this is the hourly chart. So bear in mind this is trading view. So in trading view, we do have we call it advanced technical analysis tool. That means i.e. I could use a shorter term chart like the hourly chart on Nasdaq 100, but I could overlay a higher time frame mathematical indicator like the 50-day moving average to do multi-time frame analysis on a single chart. All right. So what we could see over here is, let me repeat myself, we are now in the midst of a minor corrective decline scenario for the Nasdaq 100. So for today, I'll be flipping to a bearish bias because yesterday it broke down below 16,390, the lower limit of our neutrality range. So in any case, potentially any rebound doesn't surpassing 16,550, which is also the 20-day moving average now acting as a resistance, and as well as this former minor ascending channel support now turns to a pullback resistance, all confluencing at a similar level at 16,550, and based on the Fibo retracement on this ongoing minor corrective decline is also confluencing with the 38.2% Fibo retracement. So definitely this is a clear pivotal resistance level in the short term to maintain this ongoing minor corrective decline. Next support level to watch in the short term will be at 16,160/16,125. A breakdown below this level exposes 15,910, which confluences with the upward sloping 50-day moving average. Only an hourly close above 16,550 will actually kind of invalidate this minor corrective decline scenario to kickstart another leg of a potential impulsive up move, at least in first step towards the intermediate resistance at 16,800 in the short term, right? Given the fact that yesterday's Dow Jones Industrial Average, US Wall Street 30 came within our expectation, price action managed to rebound at the 37,470 short-term pivotal support level, printed a high of 37,744, which is very close to our resistance level that we highlighted since the start of this week at 37,800. But what you see the price action over here is that yesterday price action, the rejection close to 37,800 was rather weaker, with the hourly shooting star, and where it rejected, right, it rejected twice at this former minor ascending channel support level that is in place since 10 November 2023 low, but now turns into a pullback resistance yesterday and as well as the day before on the 4th of on Wednesday, pardon me, on Wednesday. So both of them actually form bearish candlestick pattern on the hourly time frame. So given to us that over here is that it seems to us that momentum based on candlestick analysis or price action analysis is getting rather lackluster on the upside. That means there is actually lower chances for the price action to break above 37,800 now, right now, given the appearance of these two hourly bearish candlestick pattern right at this pullback resistance of the former ascending channel support level. So given the fact that price action has started to turn lackluster rather than positive, I'll be much more neutral for today on the Dow Jones Industrial Average between 37,800 and 37,470. Pardon me, in our platform we call it the US Wall Street 30. So neutral for the US Wall Street 30 for today between 37,800 and 37,470. If we see an hourly close below 37,470, then potentially we also will start to see a minor corrective decline scenario to creep back into the US Wall Street, US Wall Street 30 towards the next support level at 36,170, which is all confluence with the upward sloping 20-day moving average. Okay, so that's sum up for the US benchmark stock indices. German 30. So German 30, recall yesterday we do have a bearish bias below in any potential pullback in any potential rebound towards this 6,880. Price action managed to hold below this 6,880 level. So no change, 16,880. Short-term pivotal resistance, maintain that short-term bearish bias to test the first support level at 16,460. Breakdown below it exposes 16,300. Only an hourly close above 16,680 will invalidate this short-term bearish bias scenario to potentially see a push up to retest the minor range stop that is in place since 14th of December high, which is a resistance at 16,970. Okay, so net still maintain that short-term bearish bias potentially on the German 30, because right now we could be in the midst of doing this minor corrective decline within this medium-term uptrend phase. Why still medium-term uptrend? Because it's still holding above the upward sloping 50-day moving average. As long as 16,680, short-term pivotal resistance is not surpassed on the upside today. Asia indices much more positive. Japan 225. So a bit of mixed bag over here. So for Asia, rather bullish right now, at least in the short term. Still recall that we have a bullish bias on the Japan 225 yesterday. Price action move according with our expectation, reintegrate back above the 20-day moving average, but overall from a technical perspective is still trapped within this sideways range that is in place since 24th of November 2023 high. So right now it's actually fast approaching above this 36,630 level that we highlighted earlier on. So for no change, so I can't tighten much further except the fact that I'm using 33,180 as my key short-term pivotal support for today, which is slightly also below today current intraday low of 33,260. So 3,180 is slightly coming close to the 20-day moving average, so I don't want to tie it so close for today's intraday low, which is at 33,260. So using 33,180 in any potential dips to maintain that bullish bias heading up towards the upper limit of this minor range resistance that is in place since November high, which is at 33,825/33,630. Okay. However, only a breakdown below 33,180, then we will start to see another round of choppy downward movement towards the bottom of the range. In first step, testing the next support level at 32,560, which is the minor swing low area of 14th of December and 18th of December. So net still maintaining a short-term bullish bias on the Japan 225 with a tightened key short-term pivotal support level for today, 33,180, within this minor range configuration that is in place since late November 2023. Hang Seng Index, Hong Kong 33. So Hong Kong 33, last day we were neutral over here, but price action managed to actually now surpass back above the 20-day moving average. So given the price is holding above the 20-day moving average, and as well as the Hong Kong 33 in hourly RSI has managed to actually show higher low as well after hitting the oversold region on Wednesday, giving us a bit of confidence that at least a bit of short-term minor upside momentum start to creep back into the picture for Hong Kong 33. So with this inherent positive short-term momentum picture element, we will be flipping to a bullish bias for today, 16,500 short-term pivotal support level. Resistance level to watch for sure will be the 50-day moving average at 17,160 /16,950, which is so confluencing with the minor range high of 20th of December and last Friday swing high as well. Okay, so it's more like a potential push up within this sideway range configuration as well that is still taking shape since the low of 11th of December. But only a breakdown below 16,500 will expose 16,330 and as well as the long-term circular support level of 16,100 level in Hong Kong 33. Okay, so moving on, next will be gold. So for spot gold over here, yesterday we will neutral. Let me start with spot gold first. Okay, spot gold, yeah, spot gold. So for spot gold, we were neutral yesterday, but given the fact that yesterday price action has started to shape a higher low right below our lower neutrality level at 2030, so a higher low being formed on the 20-day moving average after a test of it, giving us a bit of confidence that the minor short-term upside momentum may have started to creep back into spot gold back again, which is the XAU/USD. So given this positive development in short-term momentum, we'll be flipping to a bullish bias instead for today for spot gold XAU/USD using 2030 as the short-term pivotal support level. Near-term resistance to watch will be at 2060. A break above 2060 exposes last Thursday's swing high area at 2090 level. Only an hourly close below 2030 will negate this bullish tone to see the extension of this minor corrective decline to retest the 50-day upward sloping 50-day moving average, acting as a support level now at 2015/2000 level as well. All right, so now moving on, next will be the FX market. So let me start with the Aussie dollar first. So for the Aussie dollar, no change. Still using that 67 figure level as my key short-term pivotal support level. A bit of positive development has started to develop where price action on the RSI has started to slope upwards on its oversold region after hitting the oversold region again yesterday. So this is appearance of that bullish divergence condition. So using 67 figure level as my short-term pivotal support level, still maintaining that short-term potential bullish bias, at least potentially to see a retest at this near-term resistance at 67.70 level for the Aussie dollar. Only an hourly close below 67 figure level, there we could see the extension of this minor corrective decline that is in place since 28th of December last year to retest this 20-day moving average and as well as this former graphical minor swing high area at 6620/66 figure level, and also confluencing with this medium-term ascending trend line support level that is in place since the low of 26th of October. Okay, all confluencing at this 620/66 figure level. Now, dollar yen. So dollar yen yesterday going to squeeze up and broke above our short-term pivotal resistance level, which is at 46.80. So with that, right, elements are rather mixed right now. Why? Because the RSI has started to shape a bearish divergence, indicating to us that the last 2 days, 2.5 days of push up is losing upside momentum. So with that, we'll be flipping to a neutrality stance for dollar yen today, 145 figure level, lower limit 143.35. Only an hourly close below 143.35 will kind of reignite the start of another impulsive bearish down move, at least in first step to test the near-term support level at 42.20, followed by 140.70/140.25. However, hourly close above 145 figure will see the continuation of this minor corrective rebound for a squeeze up to test the 50-day moving average, which is also confluencing with this graphical resistance over here at 146.70, and also 146.70 also confluence with the entire prior we call it a minor downtrend phase of close to 50% retracement. All right, so 145 figure level is actually 38% FIBO retracement, which is the upper limit of a neutrality range. So flipping to a neutrality stance for dollar yen for today due to mixed element. Okay, European currency. So over at the European currency over here, let us start with the euro dollar. So on the euro dollar at this point in time, price continued to actually shape a higher low right above the 20-day moving average. So some signs of positive development as well after that bullish divergence was being seen earlier yesterday. So early on, bullish divergence indicated to us a slowdown in this minor corrective pullback downside momentum. Then thereafter, yesterday managed to shape a higher low right above after the reintegration above the upward sloping 20-day moving average. So another sign of positive development coming back into the euro dollar. So with that, still maintaining that short-term bullish bias on the euro dollar, 108.90 short-term pivotal support, no change. First resistance to watch will be at 110 figure level. Above 110 figure level, sees the next intermediate resistance coming in at 110.60. Only a breakdown below, hourly close below 1890, invalidate this short-term bullish outlook to see as extension of this minor corrective decline towards the next support level at 108.20. Sterling dollar. So sterling dollar also very similar movement with the euro dollar, also signs of positive come creep back into the market. Price start to shape higher low after the reintegration back above the 20-day moving average yesterday. So still no change using 126 figure level, short-term pivotal support level, looking out for a maintaining that bullish bias with the first resistance to come in at 27.60, then followed by the last Thursday's minor swing high area at 128.20. Only an hourly close below 126 figure level potentially exposes the next support level at 125 figure level, which is where we start to see the extension of this minor corrective pullback or decline towards the 20-day and the 50-day moving average as well, confluencing at the 125 figure level. All right, so that's pretty much sum up on the FX market. So on the FX market, what we could see over here is more or less still maintaining that potential dollar weakness with the acceptance of the dollar yen due to mixed element. Okay, WTI crude oil. So WTI crude oil going to hold right exactly at our short-term pivotal support today, 70.90, came down, push up, and now trade back above the 20-day moving average. So no change. We'll use 70.90 as a short-term pivotal support for West Texas oil, still maintaining that short-term bullish outlook within this complex range configuration that is in place since the low of 30th of December. Next resistance to watch will be at 74.95/76.05, which is the minor swing high of 27th December, confluencing with the downward 50-day moving average as well. So net still maintaining that short-term bullish bias as long as 70.90 short-term pivotal support level holds to see a kind of a push-up within its short-term complex range configuration for West Texas oil. Only an hourly close below 70.90 will invalidate this bullish short-term bullish outlook to expose the next support at 68.90. Below it sees the key medium-term support zone at 67.55/67 figure level. Okay, so that sum up for the short-term technical outlook across the cross asset classes. Key data to watch for today for sure will be the NFP data. So over here, let me talk about the NFP data. So NFP data will come out later on, at Singapore time at 9:30 p.m. So market is expecting a rather lackluster number, 170K below 190K added in the month of November, pardon me. So if you look at the trend of the NFP data so far, it has been hovering below 240 and as well as below an average of 240K jobs added in the last 12 months. So if you look at the trend of the 5-year trend, okay, it's rather flattish. So neither strong or neither weak. So this is more like a Goldilocks scenario for the US economy. So however, if the price of if the data came in better than expected, that means it started came in above 200 to 220K level. So that could be a scenario where we start to see dollar strength coming back into the picture. Why? Because that will actually start to temper off this kind of a extreme, not very extreme, a rather pronounced dovish Fed pivot expectation that's being priced by the interest rate futures market, where market is now expecting 6 interest rate cut heading into the entire of 2024. With a stronger job market coming into play, the probability of 6 interest rate cut will start to be tempered off. If market start to see a very strong number today, surpassing 170K, that means coming in at 220K level number of job added. So with a stronger dollar, that could also start to see further potential sell-off in the ongoing weakness on the Nasdaq 100 and may potentially spill over to the Dow Jones Industrial Average as well. So with that, that pretty much sum up of today's daily dose of market insight. And do have a great day ahead, and I wish you all a great weekend as well. And we shall speak again on Monday. Thank you.